Hello traders and welcome to another video review. Today is Friday, January 14th, 2022. Let's start with the Forex calendar. During the London session, we got plenty of data published from the UK. As you can see, we got the GDP that has beat the expectations of 0.4% with the actual reading at 0.9%, which is way better than 0.2% last time. Industrial production beats the expectations of 0.2% with the actual number of 1%, and it's way better than minus 0.5%. Manufacturing production, the same situation, beats the expectations of 0.2% with 1.1%. Visible trade balance is widening from minus 11.8 billion pounds to minus 11.3 billion pounds. So that's a very nice result. Construction output rises to 3.5%, way better than minus 1.7 last time, and index of services 1.3% versus 1.1 forecast and 1.2 last time, so beats the previous reading and expectations as well. Pretty good data from the UK economy, and we will definitely take a look at the British pound later on. What else do we have during the London session? From the important news, GDP from Germany is scheduled for release at 10 o'clock for the fourth quarter. 1.7% was the last time. We will see what is going to be this time. We got the trade balance from the Italy, CPI from the Spain. Right now it's 6.7%, so as we know, the inflationary pressures are rising across the Eurozone, and that would be everything for the Eurozone and Euro area during the early hours of the Friday. What do we have during the New York session? Plenty of data from the US. As you can see, the highlight of the day, retail sales scheduled for release 2:30, and the retail sales are expected to drop from 0.3% to 0%, which is kind of a very unlikely. So please keep an eye on the actual reading. Import price index should drop from 0.7 to 0.2. Industrial production should drop from 0.5% to 0.2%. So not that good apparently data are being expected. Michigan consumer sentiment index should drop from 70.6 to 70, and the inflation expectations scheduled for release at 4 o'clock, as you can see, last time we were at the level of 4.8% on the monthly basis. We will see what are the expectations today for the current month. At the end of the day, at 5 p.m. we got the FOMC member John Williams speech and Barker huge US rig count scheduled for release at 7 p.m. for all of you crude oil traders. So we will definitely take a look at the British pound and American dollar in today's analysis. Let's start with the British pound. The British pound at the daily time frame chart had broken out of this channel. As you can see here, market in blue broke above 1.3605. This is the key technical resistance, and it is heading to the next target at 1.3836. The recent candle, as you can see here, were very bullish. All of them are green, but this one it's a little bit concerning because it might be some sort of the pin bar candle. So please keep an eye on the current developments. We might have some pullback back down towards 1.3605. If not today, then maybe at the beginning of the next week. So that's the first thing. The second thing is market is extremely overbought on the daily time frame chart and is asking for a pullback again. Targets for pullback 1.3605, 1.3568, 1.3515. Those levels, if they are tested like here, for example, where's my arrow? There you go. If we will have that kind of a situation, the test, and then of course we expect some sort of the bounce towards the next target 1.3836. So that's the scenario for the British pound. Let's take a look at the US dollar to the Japanese yen, of course. Let's take a look at this pair. What do we have here? We have invalidation. We have invalidation of this recent market progression. So right now, 1, 2, 3, 4, 5 invalidated, bearish divergence invalidated, channel invalidated. I mean the price broke down below the lower channel line, so it doesn't matter anymore, and it looks like this level right now is technical resistance. This level right now is the swing high, 116.36. So that was only a free wave movement. Very, very, very suspicious, and it was, as they say, a fake one, a fake breakout above the high of 115.53. We got back pretty quickly below 114 right now. So this is showing us how serious are bears in pushing this market lower. Let me just maybe do it like this, so we know that this is the there you go, this is the swing high. Those levels are now technical resistance, of course, and we don't need this one. And this is the key technical support: 112.72, 112.41. Local lows, 112.28, 111.71. Those levels are definitely the levels to keep an eye on the current situation on the US dollar to Japanese yen. Very sharp reversal from the extremely overbought market conditions. We are already below the level of 50. Bears are in charge of US dollar to Japanese yen. We are looking for lower levels on this pair, of course. Let's take a look at another interesting market. This market is spot silver. Spot silver is trading back around the level of 50% of the Fibonacci retracement. So the 38 is no longer needed. As you can see, we are still trying to break and bounce above $23.38. So this is the key technical resistance right now. Local support 22.96. As long as we trade above this support, there is a chance to break above 50% technical Fibonacci retracement, hit the technical resistance 23.48, and head towards 61% of the Fibonacci retracement of the last wave down, which is shown, which is located at 23.86. So very interesting market developing on the silver. There you go. This is the line I would like to show you straight on. Maybe we will have something like this, that kind of a pattern here. If we will not break above 23.86, then maybe some sort of, if you can see it, I hope you can, this is a bearish flag. Okay, this is the pole, this is the flag. So maybe we can have a bearish flag, and then of course the target to the downside is way lower. However, any breakout above 23.86 will open the road to the recent swing high located at 25.37, made in the middle of the November last year. And last but not least, let's take a look, of course, at Bitcoin. The Bitcoin market doesn't actually doing anything constructive with the recent downtrend. As you can see, we broke out of the channel, but it was very short-lived. We didn't even hit the key technical resistance here, 45,429. There is a piercing pattern here, which is no good because this is daily time frame chart. So maybe the last chance is that we are testing the upper channel line here, and we will bounce definitely strongly towards 45,429, and then breakout will lead us towards 51,846. This is a game-changing level together with 53,228. If that's not happen during the weekend, then of course we can slowly but surely reverse lower and lower towards 40,000 and below. So please keep an eye on the current developments on Bitcoin. That's everything for me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.